It's Financial Smarts Network. Now, here's Andrew.
Hey, welcome to Financial Smarts Network. It's that time of the week again, Tuesday evening. We're glad to be here in the studio with you again. Myself and my good friend Chris.
What's
Picciurro.
up, Andrew?
What's going on, man?
Happy to be back in action here.
I'm happy to see you getting out of the office in the heat of tax season.
Yes.
Of course, folks, if you didn't know, I promised Chris dinner and drinks after the show tonight. So if you want to hang out with us, you'll just have to figure out where we are hanging out tonight in Atlanta, somewhere probably in Buckhead. But we're going to have a good time after we have a great time giving you some awesome advice, tips, and tricks in this segment. So we've got a lot to discuss. You folks who are self-employed, gig workers, self-employed, small business owners, man, this is our favorite, our wheelhouse for Chris and I. What we specialize in. So it's going to be an awesome night tonight.
It is going to be. I wonder, does Chick-fil-A have beer now? I don't know.
No, man.
Darn it.
No,
okay,
we're
going
going
to step it up,
look,
man.
I've got to stay awake tonight. I've got some Starbucks, okay? And for you out there, if you want to advertise, we can have your product right here. So just reach out to us at fsntalk.tv. You can tweet out to me if you want to be an advertiser, if you want to be a sponsor of the show. We'd love to have you on board. But anyway, enough of that, man. We got the beer coming after the session tonight.
All right. Well, thank you very much. Great to be back.
Hey, man, always good to have you on set.
I love small business owners. Yeah. They make up the majority of our practice. Small business owners are the heart of our economy in the United States. Yeah. I have such a passion for them, and
roughly 99%, I think the last statistics are comprised of small business owners. I mean, you look at every street corner across the country in Atlanta, Tennessee, New York, everywhere, it's made up of entrepreneurs.
Absolutely.
And so it's we've got, of course, entrepreneurs. They are the heart and soul of the economy, heart and soul really of the tax system in essence.
Yes.
And of course, they're part of what President Trump focused on his tax reform legislation. We've seen some huge impacts. I'm sure you have too with your clients.
Oh, absolutely. We've never been in, at least in my practicing lifetime, a better environment for small business owners with the amount of options that they have, with the tax rates that we're in.
Man, last year, and I'm sure this year will be awesome too, was stressful as we were all trying to learn the new laws and implement them and help our clients. But, some of our clients out there who were able to benefit and capitalize on it, man, it was phenomenal, some of the savings we were able to provide out there to people. It's crazy.
And you guys only charge half the savings, right? Isn't that the
we take 50% cut?
Well, unfortunately, contingency fees on refunds are unethical.
Exactly.
So, dang, I love that. Don't you love when people say, how much do you charge? I'm like...
Yeah, we save you $100,000, just give us 50, right?
Exactly. But if they owe, then that's not a good game.
Yeah, but we don't want to pay 50% of their liability either. But no, we've got so much to discuss, obviously, in 30 minutes. But let's discuss obviously some of the stuff that's beneficial to a lot of small business owners. Mileage.
Right.
Debate 58 cents we're in 2020, but filing for 2019. That's a big one. I mean, every small business owner travels to some extent, whether you're going out seeing clients.
Yeah, auto and truck expense is a big one for small business owners. So what happens is when you have a vehicle, a truck, an automobile, when you report that on your tax return, you have two options. You could take the standard mileage deduction, or you could take the actual expense.
Standard being 58 cents. Let's just put it out there for
yes,
folks so they'll
58 cents per mile.
Per business mile that they drive.
Exactly.
Yep.
So what happens when we have self-driving cars? I don't know. But we're going to, that'll be in 2023.
The car's driving, so it's as long as the car's driving.
Deduction. I would say for the vast majority of taxpayers, the standard mileage deduction is the best. And what you have to do is sometimes read through, and you're an expert on this as well, read through what the tax code is, because the government's rewarding you for certain activities and certain decisions. And if you drive, there are a lot of people that drive legitimate 15,000 miles per year.
Oh, yeah.
That's going to be, I'm not that good at numbers, but, that's a lot. That's at least
over $8,000.
Yeah, $8,000 tax deduction. For most people, they don't spend $8,000 on their vehicle. So the standard mileage deduction is going to work out well. You're going to you don't have to worry about, if you do deduct the price of the vehicle, adding that back into your income when you sell. Now, for construction clients, they're driving an F450. They're putting low miles, but it's a Hoss. It's really
70, 80 grand for those trucks these days. That's crazy.
So if you're a contractor, those trucks are your office.
Yeah.
So you probably are going to take some additional actual deduction, which we're going to talk about.
And it really
later.
is their office, because if you look at any of them, at least ours, they've got their checkbook in there, they've got their paperwork, they got their receipts. They're like, here's what receipts do you need, Andrew? It's like, here it is, right here.
Oh, I love the dashboard of any contractor client. It is hilarious. But with standard mileage, just in the record, the record keeping isn't that difficult, especially now. Some of the software out there,
apps and stuff that you can just touch a button, get in your vehicle, and touch a button and it tracks you where you're going.
Yes.
Sends you a log at the end of the year, or anytime you can export it to your email. I've got clients like that. They show up or they email me with the log for the year, and I'm like, man, this is phenomenal.
Absolutely.
And then we have other clients, as we know, not to hide it, that just struggle to keep a log. But the log is so important for the log, if there's ever an audit.
And sometimes, right? Obviously, these things go from a science to an art sometimes, and sometimes someone might not have the log perfectly done like an app would. A lot of the apps do calculate the actual deduction. But really, if you had to reconstruct your mileage log, everyone has a calendar. Mm-hmm. Even if it's an old school, calendar, then you can construct where you went. So mileage is a big deduction that's out there for taxpayers. It's one of those few deductions that the deduction actually exceeds your cash outlay typically. So that's a big one for self-employed people.
Home office these days?
Home office. I have one particular client that just refuses to take the home office deduction even though he has a valid home office.
Why?
I don't know. He doesn't want me to have any hair. He just wants me to lose it all. And I just gave up on it. But home office deduction, the same thing. If you have a legitimate home office, you should be taking the home office deduction. There are two methods again. There's the simplified. Again, government saying, I'm going to give you $5 per square foot for a legitimate home office.
Up to 300 square feet, so $1,500.
15, and then there's the actual. Yep. And you have to, now if it's within a couple bucks, I usually just go simplified, because why go through the headaches? You don't have any depreciation recapture, but what small business owners have to understand is that commuting miles are not deductible, right?
But when you have a home office,
booyah.
Then everything, the minute you step out of that home office, man, everything is a business expense, right?
Absolutely.
As far as mileage, that's the importance. That's what I always tell folks is, it's like, it's not the $500 or the $300 of deduction that's going to save you.
Yes.
It's making those miles legit from the minute you walk out. You get out, you run to the post office, you got a deduction. You run out to meet a client, you got a deduction. People say, well, Andrew, I don't oftentimes meet people at my house, for example, right? It's where the managerial functions happen.
Absolutely, and especially now in the gig economy, in a lot of virtual workers, knock on wood, I've never had an examination, and not that we get a lot of examinations from clients, but I've never had an examination where home office got thrown out. I even had an instance where the examiner went to the client's home to look at the home office, or we've sent in pictures, and it's never. Because we're not putting home office deduction if it's not a legitimate deduction, but that's one of my pet peeves.
We all have home offices these days, but virtually for most. I do have work, and if I need to get up at 3 a.m. During tax season, instead of driving to the office, so I go down to my home office and work from there. Heck, I used to work from a home office exclusively, and I've had many of agents come through for audits and stuff like that. Of course, I don't think anyone's ever blinked an eye. You can tell it's a home office in there.
Exactly, and one more thing to consider about the home office, it has to be space that is only used for an office, but it doesn't have to be an entire room.
No.
It can be a portion of a room, and especially we have a lot of Amazon sellers where they're storing inventory.
Yep. Their basements and stuff.
In their basements, in their portion of their garage, in a carriage home. So there are, or what we're finding a lot is, because I have a big, especially in real estate, we're having house chopping, which is another, well, you got to tune in for that one later, but where you're renting out a portion of your home. So so that's a little bit of a different subject, but home office, please take the mileage deduction.
Meals, of course, I think it's important for us, everyone knows meals are deductible, but what changed with the Tax Cuts and Jobs Act, of course, we're in year 2 now, second filing season with it, is that entertainment is no longer deductible. And it's important. I always stress to my clients, I can't stress enough, really, I need clean records as far as if you got any entertainment, you need to parcel it out for us, right? Because if you get audited, I mean, the IRS agent's not going to allow that. It's black and white these days. So I think that's important for us to discuss.
Right. I always explain it to my clients. You're having a company function. The cost of the birthday party or what have you, the cost of the cakes, you get a half deduction for it. The person that jumps out of it's not deductible. So make sure you definitely get a really expensive cake.
The person that jumps out of it?
And the person that jumps out's cheap.
that sounds like a conversation for another episode, Chris. Like
I know.
FSN After Dark, right? the jumping out reminds me of something else.
Well, that's the entertainment, so you can't deduct it. Sorry, so go cheap on that.
That's the X-rated version of the show that we'll keep out from tonight because kids might be watching. But no, it's just all ultra important for folks to understand that meals and entertainment. It used to be M&E, now it's just M, meaning just a meal. So yes, that's still deductible at 50%, but your entertainment portion you have to parcel out if you got any sort of entertainment out of there. And it gets a little more complex, so you may want to consult with a professional if you're working with one. If you're working on your own, maybe you still need to consider having professional help moving forward now because of all the changes and complexity in the laws.
Right, and you might need a more professional help if you're doing that type of entertainment.
Yeah, for sure.
But I would say meals and entertainment, big change. Although even with not getting the entertainment deduction, we're still finding that tax rates are much lower. I don't know if I'll ever see these low rates in my lifetime. So that's where you have to really consult your.
Yeah, and it's just sad because the media's been putting out. Obviously, we've all read it. It's the Trump tax reform hasn't helped anyone, and yada yada, and all that stuff. I just, I'm frequently on TV on various stations, and I just tell them like it is. They love to have me on because I provide advice, but it's helped. It's benefited, man. Small business owners, self-employed people, gig workers, freelancers. I mean, when you start discussing all these things, plus much more that we have in the second half of the segment where we get into 199A, the qualified business income deduction we'll discuss. I mean, it's some powerful stuff we've got. And this is, I think we've been in our careers the same amount of time. It's probably the most powerful stuff and beneficial stuff we've seen in our 25 years.
Our second segment's going to be so exciting when we get into 199A and kind of explain the theory behind that and the opportunity. I would say on the personal tax side, I'm finding about 95 to 98% of clients or taxpayers are paying less tax than before. And when it comes to small business, everyone's paying less tax. I have yet to see a return that's more tax with the same amount of fax pattern, obviously.
Of course, yeah. And it's important to note that what we often see in our world as professionals is, people aren't comparing apples to apples, right?
Right.
So, it's not your refund, how much you got back this year versus last year, it's your liability, your tax liability, because if you haven't paid enough, your liability might be less, but you still owe because you just didn't do the right thing, right? But comparing apples to apples, comparing that same income with where you would have been pre-tax reform legislation, and look at the brackets and everything. If you do it right, I've yet, like you, have seen after 2018's filing season last year, I reviewed just about all of our self-employed small business clients, man. I couldn't find one that didn't get some benefit. Some of ours got, benefits we're talking about to the tune of six figures.
Oh, for sure.
It's been very impactful. Obviously, people like to distort things. President Trump is a very controversial figure, make no mistake about it. But overall, I think, a lot of the propaganda and the media stuff we're seeing about the tax reform not being beneficial hasn't benefited the economy or self-employed people or the middle class. The middle class are self-employed people. So I think to that extent, I think just the fact that he's so controversial, people put out there things that are distorted and the facts aren't, are distorted in a sense. People like us see the real bottom line.
Well, and our job is we're a scoreboard, so no matter what the tax laws are, and we have to pivot for our clients and pivot with the advice that we provide. So in the environment right now, there's a lot more opportunity where tax deferral isn't as sexy as tax-free growth, and maybe debt servicing it is because we're in lower rates right now. So, but I mean, there's a lot of opportunities.
Well, and that's like you hit it right where you said, we always have to pivot, right? So we don't look at it as as professionals, we don't look at who's in office for the in each administration every 4 or 8 years. I mean, we go with what we were given to work with and try to find ways to help our clients reduce their liability. That's our job. That's what we get paid for, right? Keep, it's reducing our clients' liabilities and compliance, keeping our clients out of trouble is the most important thing. That's why I always tell my clients, especially those self-employed, like, you really can't put a price tag on the services we offer and the fees we charge, in essence, because it's not often time of saving you the most money. It's the compliance part of it. Staying out of trouble with Uncle Sam and not having to go through an audit is priceless.
Yeah, no one wants that. No one wants that. I mean, you're.
We've had some. We both have. We have some clients.
We got some
that
war
we've
stories.
represented, and we got plenty of war stories, which we might tell you about in just a bit. But anyway, listen, we got to take a quick break. Chris and I are going to be right back after this commercial break, so don't go anywhere because we're about to tell you how you might be able to save tens of thousands of dollars being self-employed.
Hi, I'm Angelina with All Things in Order, organization designed for your life. Well, you can find me if you want to get organized, decluttered, you're moving, packing, whatever the case may be. You can find me on Instagram at angelina.atio, or you can call me at 404-431-2273, or you can go to my website at atio-organizer.com.
Hey, we're back from break. Chris and I are still here. Man, we've got so much to discuss. We're excited to be here with you tonight. If you're self-employed, freelancer, gig worker, small business owner, meaning entrepreneur to the full extent, running a small business, retail, or work from home, listen, stay tuned here. Don't go anywhere. We've got so much to cover. And probably if we don't finish here tonight after dinner and drinks, maybe I can convince Chris to come back next week so we can do part 2 of this series. I mean, there's just so much to discuss. It's real hard to fit good quality content that people need, our viewers need out there across the country in just 15 or 30 minutes, right? But we were discussing right before we went out to go into commercial break. We were getting ready to say 199A, and this is all new part of legislation that President Trump passed, which was in effect for tax year 2018.
Yes.
2019 is here because this is our filing season. Obviously 18 was an experience for all of us trying to get comfortable with this new, because 199A is so broad and diverse and impacts different people different ways. But man, it's been pretty damn powerful legislation.
I know, and you know what I would say to all the viewers, I mean, this is the Section 199A deduction, also known as the qualified business income deduction. If your head starts spinning a little bit, it's okay.
Well, ours spun.
Ours spun, and if I had hair, it would have been gone.
Yeah.
But I would say if I really added the research I put into this and running client cases, at least 1,500 hours over the last year and a half or less, just getting our head around it. But the bigger picture is with Section 199A. Is the code section that birthed the qualified business income deduction. And the corporate tax rate went from a high rate of in the mid to high 30s down to a flat corporate tax rate of 21%, Well, so that not everybody just started creating corporations, what we call C corps. The government said we need to level the playing field, and we need to create a deduction that really reduces the tax rate for small. It doesn't even need to be small businesses. There's a lot of big businesses that get this.
Well, exactly. I mean, we refer to it as small business, but it's basically for pass-through entities, not for C corps. And I know you and I, of course, sit together, serve on Intuit's tax council, and we've had the privilege and the benefit of being up in Washington, D.C. at Capitol Hill and hearing what's going on and how this came about, just other things, right? Having insight that others in our industry don't have. And it's powerful stuff. It's set to all expire or sunset at the end of 2025. We'll see what happens there because it's election year again. So whether President Trump gets elected, it might determine whether this might become permanent legislation. But we went through last year's season. Man, it was interesting. It was head pounding for us because we were trying to wrap our heads around it. We had some technical glitches with software in the beginning. Software companies were trying to evolve into it as well. So it was an interesting season. Hopefully this season goes smoother for us. A lot of our self-employed clients are going on extension, as I'm sure yours are too. But it's for their benefit. That's what I always tell folks, right? That 199A provides an opportunity for up to potentially 20% of that income, of that profit on a pass-through entity to be eligible for exclusion from federal taxes, right? So it's powerful.
Exactly. So bigger picture, the 199A deduction allows, like you said, think about it as a maximum 20% of your business income, or QBI, is 20. You get a 20% tax deduction. Or rather, 20% of that income
is tax-free.
Is tax-free. I'm sorry about that. So that's a big number. Yes. Now, we start with that. There are different phase-outs based on income, based on something we call a specialized service, trade, or business, a lot of technical stuff. So if you're in the situation where you feel that you're getting phased out of this, you definitely need to talk to a professional at that point.
I think you need to talk to a professional. I mean, I think you're missing the boat big time. If you were self-employed before with the old laws and it was rather kind of simple, let's just call it whatever simple might be. I don't think there's anything simple in our world. I think you might have been able to do your return yourself possibly. But man, with this new legislation, Chris, I think someone's just being completely naive to some extent and hurting themselves in their business if they don't have a good tax professional working with them, because oftentimes people look at our fees that we charge, but ultimately, as I tell people, we are their silent partner. I mean, we help them run the ship behind the scenes, and we get no glory for it. Not that we want it in a sense, right? But this effectively, it's we have clients who have us on speed dial. We'll get text messages or emails like, "Hey, can I do this? Hey, can I do that?" Right? And with 199A, it was hard enough in year one for us to figure it out as professionals, let alone for the average business owner to figure out how to navigate this 199A. But 20%, because it could be 20% of your QBI, your business income. It might be 20% of taxable income. If you get over a certain limit, then your employees' wages and everything else, there's phase outs, phase ins. I mean, it's a complex situation. But you've got to, like, if you're a pass-through entity, you've got to address the situation. So trying to do your taxes on your own this tax season is just a no-no for as far as I'm concerned.
Absolutely. No, you have to take advantage of the qualified business QBI deduction or 199A deduction. Even if you have an income that is north of $500 to $1 million, there are still ways you can take advantage of this deduction with the proper planning.
One of our biggest clients had income of almost $2 million pass-through entity last year. And when you do the correct comparison with QBI and wages, limitations that came in and everything, I mean, between the change in brackets and the QBI, I mean, and some other tax planning, I mean, we saved them roughly $300,000, man. I mean, it's powerful. Like, people listen and they're like, that can't be the case. I'm like, yes, it can.
It is. It really is. It is. And I mean, a lot of us CPAs out there say if we could change your facts, we could change your tax. So, we're watching this right now. We're thinking about 2019's tax filing. My advice would be at this point, make sure that if you are maximizing your qualified business income deduction for 2019, we're going to have another discussion about what you can do. But right now starts your planning for 2020. And I would say 40% of our clients for in my practice, we do extensions. Now, we make sure that we figure out where they're at tax-wise, because, and I would like it to actually be like 75%, because don't you want more time to wrap something up? There's a lot of times where a client has a deduction that we might want to move into, keep as much as we can this year, or push some into the next
exactly.
year?
It's the planning. The asset's been purchased, in 2019. And we've had plenty towards the end of the year. It was phenomenal, right? I mean, not only are we seeing small businesses get, this impactful tax breaks, but the economy is also doing so darn well that, we've had clients whose revenues have doubled and tripled that we were looking at the end of the year come November, and we were reaching out. We're like, hey, it's like, you got to make an estimated tax payment, of course, for Q4. But number two is like, what do you need for your business? Like as far as asset purchases, vehicles, equipment, computers, if you're a contractor, a backhoe, a ditch, digger, whatever the case is, it's powerful because, we had one case where we told a client, he says, what if I buy a $62,000 truck? And we did the math, and we're like, you're saving almost $15,500. So if you don't buy it, and you truly need it, then you're going to end up buying it next year anyway, and you're going to end up paying Uncle Sam almost 16 grand more than you need to pay. It's some powerful stuff, man. I love it. I mean, you can see the excitement between us.
I know. And I'm sure you get a lot of calls from spouses that aren't happy that their husbands went and bought a $70,000 truck. But in all seriousness, though, if you need the equipment, we say don't let the tax tail wag the dog. But if you need the equipment, you should take advantage of it. We're going to talk a little more in another episode on some more details on that. But just talking about the 199A deduction, it really opens us up to the bigger discussion with any business owner of how should you be structured? Should you be an LLC, which we get that question a lot, and a lot of times an LLC really doesn't provide any tax benefits for the most part. It does potentially provide some liability protection. Correct. But the LLC is a flexible entity where it could elect to be taxed as a C Corp, an S Corp. So should someone be taxed as a C Corporation, an S Corporation, an LLC taxed, because an LLC isn't a tax filing. It's on the federal level. It's you're either a partnership. Especially with 199A, have there been partnership and LLC agreements changed because how guaranteed partner payments are handled? There are so many opportunities.
Well, and for us, before I forget, Chris, not to interrupt you, but pass-through entities under 199A for QBI purposes also consists of Schedule C filers now, right? We never really thought Schedule C technically as a pass-through. We always think about, an S Corp or an LLC as an S Corp or a partnership for the most part, those two entities. But, if someone is rather small, maybe it's just not worth the money, the extra record keeping to have a totally separate entity and they've been a Schedule C, they can still remain that and still qualify for the QBI deduction.
Oh, Schedule C will be qualified business income. And for some clients, depending, in the state of Tennessee where I reside, it's a no tax state, but we do have a franchise and excise tax, so we have to consider that. So you have a lot of local and state considerations when forming your entity, but create your team and consult with your tax professional and your legal counsel as to how you're supposed to be. How should you be structured? One interesting thing with the 199A that I want to talk about is there was some guidance. I remember because on my birthday in 2019 from the IRS if you own rental properties.
That was huge.
Yeah, I would say 75 to 80% of our clients that have rental properties typically have a loss on their tax return, not because they're not cash flowing, but because you get the depreciation deduction and mortgage interest, property taxes, property management fees. But for the people that do have a net profit from rental properties, you could qualify for the 199A deduction on your rental properties. That is like the Shangri-La, because think about it, rental properties in general, there are some exceptions, go on Schedule E, which means that they're not subject to self-employment tax, and you get the 199A deduction.
You got, let's just say someone has a decent rental property that's throwing $10,000 profit for the year. I mean, they might have 2,000 of that, 20% of that, up to 20%. That's exempt from federal tax purposes, right? I mean, that's huge. As you said, most rental properties cash flow negative because of depreciation. Right. But just overall, man, it's that. Small business owners, Schedule Cs. I mean, it's just so broad and interesting. And, a lot of times it's also situations with sitting down with our clients. They might be, for example, not to get too technical and complex for our viewers, of course, since they're not tax experts, but let's just say we have a partnership who has guaranteed payments. The partners, one or both, are over the limit, and they might be phased out. So we got the wage income limitations that come in, and a lot of times it's also making changes, structural changes like that, to say, hey, you know what, this LLC partnership has benefited you greatly these years, but maybe it's now time for us to change to an S Corp and make those guaranteed payments as part of W-2 wages so we can get a bigger benefit out there.
Exactly. I mean, there are situations where partnerships make S Corp elections. There's an LLC actually would make the S Corp election. There could be a situation where a single member LLC, which would be reported on a Schedule C, assuming it's not rental property, makes an S Corp election. Obviously, with an S Corp, you have to pay yourself a reasonable compensation. So everyone, consult your advisor. You got to take reasonable comp. But a lot of times that reasonable compensation isn't that high. And so you would be picking up potentially some payroll tax savings, but also, especially in a situation where you're phasing out of the 199A deduction based on income, you might be able to pick up a deduction based on your wages paid. So each person, and that's one thing I do want to hit on that maybe I glossed over. Please, everyone, remember, like the 199A deduction is a personal deduction.
Correct. Yes. And very important for us to know that.
It's a personal deduction, and just think about this cup as your tax return. There's things pouring into it that affect your 199A. They could be self-employment income. They could be ownership in a partnership. That could be actually there's some. This is something that people miss a lot too. There's a lot of times brokerage income.
Yes.
There are certain brokerage income that is eligible for 199A if you own REITs.
Exactly, dividends coming in from REITs and whatnot, right? There's just so much. This legislation is so big and powerful and it's crazy as to the amount of stuff that they created through 199A, and that's why I'm just really, really curious and excited to see. Will this, sunset at the end of 2025, or is this going to become permanent legislation? I mean, I'd love for it to be permanent. It keeps us entertained, not entertained, but on our toes essentially, because we basically have an opportunity to help our clients continue with tax planning and help them benefit, to as much as possible by paying the least amount of money legally, in taxes. I mean, that's what it's all about with what we do. I'm
finding somewhere between 25% and a third of the practitioners in where I'm at in the Nashville area have either sold their practices or just gone out of business or sunset out or transitioned out with this new legislation over the last couple of years, because it is a paradigm shift in the tax code.
Yes.
That you have to.
Yeah, we've seen that. We picked up new clients, and I always ask, why are you changing? How'd you find us, et cetera, et cetera. Did you get referred from an existing client? And the common theme has been last year, and probably from what we're seeing this year, is my preparer, or my CPA or whoever, retired. He was older, and he just, he retired, and that was it. So, but yeah, listen, man. It's been awesome to have you here again.
Thank you.
Obviously, folks, we have not covered in depth what we want to cover. This is the powerful legislation that we've got. We're going to do a sequel with a second episode to this. So make sure you stick around in the coming weeks. We're in the thick of tax season. It might benefit you to go on extension. We'll discuss that in the next episode as to why. We'll discuss more in depth 199A. Do you qualify? How do you qualify? Retirement accounts. Having your kids on the books, perhaps, and getting tax-free money out legally. So tune in. Chris and I are going to be back again next week, and in the coming weeks, we've got a lot to discuss. So don't miss the opportunity to learn more as we come along. It's been great to be here with you tonight. FSNTalk.tv. Tune in. You can tweet out to us, Chris and myself. You can reach us via our website. But listen, be blessed. Have a great evening, and stay tuned next week for more powerful information.